Welcome to Trading Lounge and the Bitcoin report for the Wednesday, the 23rd of June. This is Ethereum and Bitcoin here, and the reason for showing this on just the daily chart, we had a look at this before. It's just that we could count this as 1 and 2 and 3 and an ABC here for 4, but I think what it's showing here is that if ETH is on the first side here, then that's the dominant side here. So we're seeing Ethereum being weaker than Bitcoin at this point, with it coming down through here. We can see 5 waves from the top here for this, and we can see an ABC here for this. So it may be an A and a B and a C, and it's sort of finishing here. I haven't pulled it apart within all of this, but yeah, we're just keeping an eye on this. But just to really note that Ethereum is a little bit weaker than Bitcoin. We can also see here too, if we just pull this up here, we can see the volume down here on these last days down here is increasing to the downside. So there is that either capitulation or increasing pressure to the downside for that. But what I wanted to do today is just really start with Ethereum here, and I want to start just on the tick chart here, just to go over things, because this this move down the bottom down through here, whichever way we count it, we've all got different counts for it. So it's a good time to take stead and just go back and just check on a few things. So from the top here, this is 100 ticks, this chart here. So in this case, I've been counting Ethereum down from the top here as wave 1 here and wave 2 here, and then blue wave 3 would come down to this point here, and that would be counting this as 1 here and 2 here and 3 to here and 4 to here and 5 to here, leaving an A and a B and a C here for wave 4, and then 1 and 2 and 3 and 4 and coming down for wave 5 here. So I guess what I'm saying on this particular count, I'm counting 5 waves from the top down to this sharp point here. Okay, so we're going to look at it also in a slightly different way as well. But I think that, if you're following this market and you're counting it down, then, and if you can see something wrong with my count, well, then please let me know, because then I can feed that back to other folks as well. And we're all in the same boat. It's no big deal. And so from this point, we can see clearly that this is an A and a B and a C wave through here. We can also count this down here as an A wave, a B wave, and then 1 and 2 and 3 here and 4 here, and then down for 5 as 1 and 2 and, 3, 4 and 5 here. I did that a little bit quick, but yeah, that 5 waves here. So it has made a new low here, but B waves can do that. And then we could look at this as wave C, D, and E here for this. And if that's the case, then we can look at this here as 1 and 2 and 3 and 4 and 5, or 1 and 2 here. I can get a low in here, and we'll look at that in the next chart. But I don't really see a wave 4. I see a wave 2 here, but I don't see a wave 4 here for this. So it's possible that this can just be an A wave, a B wave, and a C wave up to the 38.2% retracement level, which is just above the 2000, and then down here for wave 5 of C and finish down here. So basically an A wave here, a B wave here, and a C wave over here for that. So that's one way to count this down. The other way is, let's just go to the hourly chart. I think that should just about do the trick as well. So we'll need to bring some data in here, so not that much. So from the top here, counting it down slightly differently, instead of having, let's open this up a little bit, instead of having the wave A over here where I had it on the tick chart, in this case would count it down as 1 here and 2 here, and then 1 and 2 here and 3 to here, and then 4 to here, and then down for 5 for 3 here. So 1 and 2 and 3 and 4 and 5 here for the third wave, fourth wave here, and then using this as the fifth wave down here for wave A. If that was the case, right, if that was the case, then we could look at this as an A wave, a B wave, and a C wave here for the B wave. I know most folks are looking at it as a wave 4. And then from that point, we can look at this as 5 waves down here as wave 1, which counts okay. This little sharp move in here makes it a little bit dodgy, I have to say. But apart from that, 1 and 2 and 3 and 4, a bit of an overlap here, 2 on that, and 5 here for wave 1, an A and a B and a C for wave 2 there. And then coming down through here, we would look at this as 1 and 2 here, and then we counted this down the other day for 3 and 4, and then 1 and 2 and 3 and 4 and 5 here for the third wave and the fourth wave and the fifth wave. So in this case, we could have a low in place with a small wave 4 here compared to wave 2. So wave 2 being complicated and wave 4 being simple. Now, yeah. So, I mean, obviously there's a lot of pressure to the downside. One of the things that I was reading about over the weekend is that, you know, there's all of this move that's coming, all of this, you know, all of this big move that's coming, or since this area over, or since really over here, there was a lot of money going off the, you know, from on-chain analysis techniques. There was a lot of, you know, obviously people moving Bitcoin out of the market, a lot of retailers being taken out here, moving out. But one of the things that so also too with all of this move down here, there's less accounts being opened in you know, so there's less of everything coming in here from the retail side. But one of the things that's really sort of showing up as a positive, and what we would expect as a more mature trader, what we're actually seeing is we're seeing larger accounts, so anything you know, up to 10,000 Bitcoin, so whales basically. So what we're seeing is we're seeing an increase in purchasing from whales in all of these lows here. So we're seeing retailers run and we're seeing whales buy, and that's from on-chain analysis. So yeah, and we'd expect all of that as well, you know. So we're seeing professional traders, big traders buy, and we're seeing, you know, when you're looking at that, we're seeing, like, if there was a chart coming down, this is the angle of increase of whales purchasing off retailers. I mean, it's very obvious from on-chain analysis, and there's plenty of those things around to look at. So we are seeing whales buying here as retailers dump. So the question really is that obviously it looks like we've got further to move down. down. So if I was going, I mean, I'm just a hodler, so I don't really care. But if we're thinking this is a low here, then first of all, we'd need to look at this as an A wave, a B wave, and a C wave up here for this. So really to buy here, would need across the 2000 here, we would need a classic trading levels pattern here for this. So we'd need that first high above the level. So that would be, if we're going to buy, that would be it over here for that. Just pointing that out at this stage, and just to make that a bit clearer, if that's the 3000 here, this can be the A, the B, and the C wave up here for wave 4, and the market can just continue all the way down. But once we've got that first high above the level, we can use that to look to go long at that point. So that's what I'm just sort of pointing out here. So if we were considering, if there is a low, if this count is correct, which is against the grain here, against the trend, we would need to see a really solid support on the 2000, and then you can build in on 100, 200, and 300 on that side. So yeah, just looking at the crypto index, this is, I mean, this is not the total market. This is just you know, when you look at these crypto indexes, they might be the top 10, the top 20, the top 50, the top 100 or whatever, but they will be dominated by, you know, Bitcoin and Ethereum in that case. So this is the other count here as well for this index here, with 1 and 2 here, and 1 and 2 and 3 and 4 and 5 here, then the A, B, C, D and E here, and then down for 5. It just depends on how you want to count that there. But there can certainly be another low, but I think we should be, you know, looking for a low to come in place with all of these. I mean, that's the main point with these. Let's tune into Bitcoin now. So with Bitcoin here, I mean, I like to have a look at all the possible counts, you know, and, you know, there's a big difference from being an analyst and being a trader. You know, you need to put on the right hat at the right time for things. So, I mean, most people really want to be looking to, and even though the market's coming down, everybody's looking for a low, trying to understand the markets and for a setup, but we don't really have a setup just yet for all of this. But if we were looking at a bigger bullish count, we could look at the market as wave 3 top over here, with an A wave here, a B wave here, and then a C wave coming down through here. So it is possible, you know, if you use your log scale, then, you know, this has moved back to the wave 4 of one lesser degree, and it looks sort of okay as such as being a wave 4. So this is possible. And now that we've actually, you know, we've made a new low here, so it does make this one here corrective in that case. There's a couple of different ways to count this, but in a nutshell, we could look at it as 1 and 2 and 3 and 4 and 5 and coming down here. Because the extension's in wave 3 here, we can look at wave 5 here being roughly the same length as wave 1 here. So the idea is really to count this down here and try to get the 5 waves down through here. Obviously, we're going to get a bounce off 30,000. That's just natural, and there's support over here. And like I said, there are whales coming in, and while retailers are dumping this, whales are buying it. You know, they've been buying from this point, you know, so they're just increasing their positions, and you can see that. So that's not a big. So it's just the whales are soaking up all the fear money, you know, everybody that's getting rattled out of their positions. So we can either look at the market a couple of different ways, and I think that it's just in the bigger picture to look at them. You know, this is one way of looking at it. The other way to look at it, of course, is that, well, we can say, well, that's the actual top there, and we have 5 waves down here. So in that case, we'll look at the market like this. We've been talking about this anyway. So in a nutshell, wave 1 here, 2 here, 3 here, correction for wave 4, and then down for wave 5 for wave A here. So if we do take this position, then because we've got 5 waves here, that means that we would get an ABC correction after that. That wave A would be back down here for that too, by the way. It would come back up and hit this. I'll just move this, get this right while I'm here. Just shorten this up a little bit. I mean, it would react from that level there anyway. So, yeah. So if we, you know, assume that this is the top here, and rather one of these tops, then 1 and 2 and 3 and 4 and 5, that's pretty clear. So this would be, you know, a pretty straightforward sort of case with this. This C wave may come lower than this as well. It's normally the case, especially when you get 5 waves coming into play here. It will just depend, you know, if this B wave is much higher up here, then the C wave will be less. If the B wave is lower down here, then the C wave will be lower down here. That's what I normally find with markets. And this market, this product, is no different from any other market because they're all traded by humans, and it's all human nature, and it just boils down to that. It doesn't make any difference. So either way we look at the markets at this point, either way we look at this market, we can see that we're in this last leg here. Really, that's the bottom line for that. So we could count this correction across here in different ways. That's not really a problem. I mean, it is a problem, but now that we've made a new low, we don't really have to concern ourselves with which is the right count. For theory and technicals, we can look at that. But yeah, we've made that new low here now, and yeah, we just really need to count this structure down here, and then we also need to gather information about any turn to the upside at this point. Now, first of all, we can expect a bounce off this. And we do need to be careful because, it could be that all of this is just wave 1 and we come back for wave 2 and then we go down for 3, 4 and 5. Now, people can, get emotional about that and throw things and saying that's impossible and all the rest of it. But we just have to move with the evidence. We have to look at all the possible counts and then reduce them one by one. So it is possible for the market to move lower. Okay, let's go in and have a look on the intraday. So this is just the hourly chart here, and we've been counting this down the other day as well. So I've increased, we had this wave 1 sitting over here for this one, so I've lifted it up 1, but we'll probably, because we've got this, if that's orange wave 4 and going down for orange wave 5, then we'll need to lift these up one more to wave 1 and wave 2 here. But that's not really the big deal at this point in time. What we're trying to do here is try to understand counting to the downside here. So we'd counted down here as 1 and 2 here, so I don't need to go over a lot of this, but 1 and 2 and 3 and 4 and 5 here for the third wave and the fourth wave. And I think last time we spoke, we were looking for the fifth wave to move down. So we could have the fifth wave in play here, but like I mentioned, we could just have, it looks impulsive up here, so we can actually have a low in here. We may just have an ABC correction to the 50-60% mark here and then move down from that point. We know Bitcoin's a little bit stronger than Ethereum because we looked at that Ethereum Bitcoin relationship. So we can and we talked about that the other day as well. So we can focus on the better count coming from Bitcoin rather than Ethereum. All right, so Ethereum could make a new low and Bitcoin may not, so to speak, So it's the Bitcoin one that we want, and we know that the whales are coming in to Bitcoin, rather than, I mean, all the markets really follow Bitcoin, generally speaking. So, look, we can have this here as all the way down here for finishing here for wave 5, finishing here for that. Or we can have this all coming down here for wave 1 here, and coming back for wave 2 here for this. So that would be the downside move, and then coming down for wave 3 here for that. Or we can have a low in place. So I won't know really until once we got a classic trading levels pattern on this 50-60% area here. This is the 35,000. So that's really the number, 5 being the second strongest number, and it's a halfway mark between these two big numbers here. And we can see that this is a fair bit of consolidation here. So we would look for I would look for a classic trading levels pattern here. Really, just what we're looking for is the first high above the level. That's the ticket. At that point, it would tell us that we're moving up from that point. So we could obviously take the top there. That's the one we're looking at. Maybe you can find the second one. Yeah, I mean, if you went long now, you just need to leave the stop under the 30,000. This little move up here does appear to be impulsive. There's no overlapping wave structures in that. It could pull back a little bit lower, so it can pull back to the 50-60% retracement level here for this. So it can pull lower into this space. And you can also, we've got that first high above the level, so you could also go long at that point. If you're a trader, you might be able to get a better position by going through that way, so to speak, But, all that sort of stuff I'll just leave up to you at this stage. So, yeah, look, just to recap a little bit, sure, the markets can come lower. That's not a problem. Yeah, so, but as it stands from wave 4 here, we have made a new low down here. We can count 5 waves down to this point, so we can have a low in place. That can be the low of this, and we can move up from this point. But I got no evidence of that. I can't say that for sure. We've got an impulse wave here by the looks of it, so we should get another impulse. But even that doesn't tell me that we're going to go higher at that point. It's only when I get a classic trading levels pattern on here that would be the safe trade. That's the one that I would be taking at that point. If you're a hodler, I mean, you want to be buying at this level anyway, you know. You know, buying each day or each week or each month or whatever you do, or when you've got spare pocket money like myself, then I just go in and buy. I can't buy at the moment because I've still got 4 Bitcoins, and I have been buying on the lows over here. I haven't bought for this month because in Australia we've got our tax period coming up, and I need extra money to pay accountants, and I've got an ASIC license, and all these things cost a lot of money. So I've just got to save this month for all of those bills. But once that's done, I'll be back buying again regularly. So I think I might have 130 odd thousand dollars in the Australian dollars in the market at the moment, something like that. Not sure, but not that it matters. And yeah, hopefully as time goes on, I'll get up to $250,000 in the market for this. And I'm just taking a 10-year view, like I've mentioned before. So you know, I really don't care. I mean, I kind of like it to be lower, you know, because, you know, based on the 15 bull and bear markets that have been before, the whole thing is building. And really the baseline of everything is new technology is not going to go away, is it? We've always embraced it. It's always a rocky start. There's, you know, it shakes out the old school and brings in the new school, and, you know, there's a lot of volatility and change and all that. But, you know, if you can hang on for grim death, then this is a fantastic opportunity over the long period. All right, I'll leave it at that. Thanks for tuning in. Cheers.